presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-873-7618.
Let's go to Al in Tampa. Hey, Al, what's going on?
Oh, it's a beautiful thing. I mean, if your listeners don't get the gold report, they're missing out. I mean, with your gold report, you just printing money. I love it.
You're my best ad out there, Al. Let's go to Jeff in New Jersey. Hey, Jeff, what's going on?
Great. Hey, listen, I was calling to thank you. A few weeks ago, you were prompting on your show to fill out that $10,000 grant.
Yes.
So I filled it out, and just a couple days ago, I found $1,000 in my business checking account.
That's awesome, man. That's awesome. Yeah.
And I owe it to you, because if it wasn't for your prompting, I would have just assumed, no way I would have gotten anything. So I wanted to thank you.
No, we appreciate you growling a problem with us here.
Now, Tom O'Brien.
Everyone, Basil Chapman. Sitting in for the one and only Tom O'Brien. This last hour of trading, I have the Tiger Technicians Hour, 10 o'clock to 11 o'clock weekdays, and I also have the opening call daily newsletter. And I'm going to show you this right now. The Dow is down 270 at 37,712. There's an arc formation that we look at, and it took out the left side low of 38,457 from the 5th of March, and it's just been plummeting since, and it's sitting right on what I call the Chapman Wave inside wedge target support line. That target support line says that the 37,100s would be a target within the next sometime by Friday. We don't know if that's going to be correct, but we'll see. So, and I'd say that I talk about the weekly charts as soon as I return. So let me do this. I'm going to first of all say that S&P is down sharply. The S&P is down 62 at 5,060. Look, it's just about to take out the left side low of importance. That was the 5th of March of 5,056. We're really close there. The QQQ, same arch formation. The QQQ right now is trading also with an arch formation, taking out all the left side lows. The next one is this huge gap. You remember that gap up that started on the 21st of February? Well, that low is 421. I don't know if we're going to go down there. Right now we are 430. Here's your first real support zone. That support line coming in, well, if it's tomorrow, it's at about 429, and we're at 430 right now. Oh, yeah, it's not too bad, very close, 428. We're down 7.5 at 430. IWM, the Russell 2000, this is the small caps, no chance, down 3.4 at 195.27. Looks like the 192 200-period exponential moving average area is going to be targeted. Gold is holding extremely well. Gold right now is... Did I just hear some funny sign? Yeah, gold is up 23 at 23.97. One of the reasons is that Middle East situation. Countries, big institutions flock to gold when there's a geopolitical situation, which there is right now. Silver is also up. Silver is up 59 cents at 28.91, acting extremely well. We've got, let me go to this now. I'm going to go to the dollar because there's a lot to discuss. And then we're going to have Steve Rhodes on. So let's get to 106.18, up 14 ticks in the dollar. Dollar looks like it wants to target the 107s. It's at 106.18 right now. The euro took a huge dive. Look at this. The euro is down sharply, down at 1.06. Looking at this is going to be the Japanese yen, USD JPY. Look at that. JPY breaking out up in the 154 area. This is a multi-year high. It's really acting extremely well at this particular point. It makes 152 to 151 very strong support area. But look at bonds down two, making lower lows. If you look at the TLT, that's the Lehman 20-year Treasury bond ETF. You can see that there isn't very much support on the left here. Not a trough that we'd be looking at. So at 90, the whole area of it's trading right now at 88.68, down $1.61. The whole area of 91 to 92.5. That's very strong resistance. And as long as these yields are going up, that's impacting the. Here we go. Look at this. This is impacting the weekly. This is impacting the home builders. Philadelphia Housing Index down 11. So what I wanted to show you, this is for those of you who are aware of my looking at peak Ds for other things to happen. Look at this daily chart. I've used this as the second phantom peak. I didn't use that one, but this, the strongest leg A, going all the way to that level, I was able to use by just a fractional miss of a peak. This is ABC. That gives you a D. And the reason why I wanted to be ahead of the game, because the futures have already given the weekly chart a peak D. Look at the ES. This is the futures in the E-mini. Gotten to a peak D. Peak D is where other things can happen. So this is very serious. Now, the very last thing I want to look at, hopefully before we get to the break, is this right here. Let me move over. Look at this. So for my subscribers, we use 3 lines. One is the price of whatever we're following. The other is the 9-period exponential moving average, and the other is the 14. Look at this. From the turnaround about the 7th, the 6th of November of last year in the 148 area, this 9-period moving average went positive, and it remained positive except for one day that it went negative up until today. And even today, you had to wait a while before it turned negative. And now it's negative, and that's the only index that major index that we're looking at. Look, the Dow, pink 9-period moving average, sell mode. S&P, pink 9-period moving average, sell signal by the end of the day. I might have to give it a sell mode designation. QQQ, look at this right there, pink. It went pink, then flipped to green, went to now it's back to pink. This is the QQQs, pink, and we've got the IWM. It's been pink for a while. Look at that. I use pink because when I use it together with the red candles, I like pink changes the color a little bit. So we waited and waited and waited for the SMHs to confirm. We knew that they were going to confirm. We're talking about the weakness. Now look at this. I also talk about round numbers. We've had round numbers at highs, all-time highs. Look at this. The NVD, one of the great semiconductor companies, NVIDIA, 974.00 on the 8th of March, all-time high, and look where it is now at 865. We can go on. Look at this. Even Caterpillar, we're in all the different sectors. Caterpillar had a round number 381, and then the very next session makes an all-time high of 382.01. Here it is down at 363. Dear, I mean, you can go all over the show. I'm taking this much more seriously than I had a week ago. Not that I wasn't taking it seriously on the daily charts, but now I think we're being impacted in the weekly. Even Deere makes a recovery high just the other day. 413.92 was the high, but that same day, the 8th of April, it has a 413 round number open. So this is something I have to take seriously. Just one other thing we're looking at is high-grade copper. High-grade copper is still doing well. So all these commodities, and this is very interesting because we are long the DBA, which is the DBA Agricultural Fund. Here it is at an all-time high. That's the agriculturals. That's the commodities. Inflation. Bonds going up. Bond yields going up. I'll be back with Steve Rhodes in a moment. I'm looking forward to that. Basil Chapman sitting in for Tom O'Brien. I'm the author of the Opening Call Daily Newsletter and the Tiger Technicians Hour at 10 o'clock. I'll be back in a moment sitting in for Tom O'Brien.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, we're back. Basil Chapman sitting in for the one and only Tom O'Brien, and we have got the one and only Steve Rhodes. Steve Rhodes, the author of Mastering Probability. Steve, you are there, right?
I am. I hear you loud and clear. How are you today, Basil?
I'm well, thank you. And how are you?
Good, good. So the Boston Marathon took place today, I believe, right? And
yes.
I think the guy who won averaged 13 miles an hour in running for 26 miles. I mean, are you a runner? Are you a jogger? I know you're a big tennis player.
I'm a sprinter. That was my thing when I was in high school. I was fortunate to have some records running as a senior under 16, and they were held for about 10 years.
Oh, cool.
Yeah, and they were actually under 16, and then because of that, it was also the under 18 and open. So although I ran under 16, they were faster than the under 18 and open. Of course,
was that in South Africa, or was that?
That was in South Africa. Yes,
South
yes.
Africa. Oh, yeah. That's cool. Can you imagine running on average 13 miles an hour for 2 hours? For 2 hours.
I was looking last night. There are sprinters today that are doing times. It's just unbelievable what's going on in athletics. I love that. The fact that people are so interested in sprinting and long distance. There are times where it goes in and out of favor, but right now it's very exciting.
Yeah, Roger Bannister, he was the guy that first broke the 4-minute mile.
I ran in a meet when he was the guest. He was a guest at that. I ran from my province as a high schooler. He was the guest. He was the guest for the club that day that I ran. So I actually got to see him. I didn't meet him, but I got to see him. Yeah.
He's the one guy. So you figure for years, people tried to break the 4-minute mile. In fact, the day that he did it, and this is what I read, so I didn't talk to him personally or anything. But the day that he was going to run, that he actually broke the 4-minute mile, the wind was going the wrong way, and he was thinking of not running. But he
really,
did it
I did not know that.
Yeah, but he ran and he broke the 4-minute mile, and then within a year. I don't remember the exact number, but 10 or 15 or 20 guys, once they saw it, they knew that they could do it. Isn't that crazy?
Human nature. That's human nature. That's the same. I remember the 10-second 100, and all of a sudden it just started getting, people always aspire to the next level. I love that. I'm going to ask you, what about the market? I think people don't want to hear about what I've done. They want to know, what are you talking about in the market?
But Basil, that's the lead-in, because it's all about emotion. Right? It's
Good.
all about emotions. And so, if I were to today's segment is really kind of, just to discuss the cycle of emotions. Kind of take, for example, and we've all experienced this, or we've all seen this in the stock charts, from going from euphoria to actually raising the red flag, and calling it quits. So in a market like this, you were talking about the Middle East war. It's been going on for thousands of years, although it's a bit more serious at this stage of the game. How do you trade through those emotions? And for me, it's really about pattern recognition. For you,
yes,
it's about pattern recognition. So
Correct.
You share with us a set of tools that works for you, that has created success. I do the same thing. And so for me, that boils down to really knowing about 5 or 6 different things. Where is support and resistance? To me, that's the very first thing when I'm taking a look at what a stock chart is doing. And then it's about being able to identify, is there a top or a bottom pattern? For me, I like to use the TD9s, the Rhodes Momentum Indicator, buy and sell the D point, the A to B equals CD, and wave number 7. Brought to us by none other than you, Basil Chapman. So if we take a look at gold and silver, so what I wanted to share with folks right now, because this is about support and resistance, is that gold and silver are attempting to form new TAS market profiles. TAS market profiles, folks, they help me to identify objectively support and resistance. Now, I say they're attempting to form, Basil, because I use this little advanced tool that identifies them as they're forming. They don't always form. For example, the one in silver. So I took a snapshot of this chart just before we came on the air, maybe about 5 minutes before we came on the air. And the profile that I have for silver is actually vanished. Doesn't mean that it won't come back and be there at 6:01 this evening. But let me share with folks, at least for the gold and silver, at least, but gold, I now have resistance at 2,400, and I've got support at 2318.70. And we'll see in a few moments here why that's so important to understand. The silver resistance level was up at 2885, and support was at between 2745 and 2780. So that's shown on these charts here. And I'm just looking at the upper left-hand side, gold and silver. And gold still has what I refer to as a sell the D point pattern. That would be negated if price were to close today above 2384.50. But the reason why these TAS market profiles are so important is they can help us, they can help traders, they can help investors understand when there's a change in trend for that time frame. So this happens to be a daily time frame chart for gold, and it shows that new potential profile that is attempting to form. And so if we just simply go back to January 17th, that's the lower left-hand side of my chart, that was when price closes below the bottom of profile, that says it's broken through support. And that generates a change in trend, a profile change in trend signal. We can see here as we follow gold from the 17th till the end of January, price had spiked up, and it spiked right up into the top of that profile. So it never cleared resistance. If you don't clear resistance, resistance is resistance. You're either going to consolidate or move lower. And that's, in fact, what gold did here. And what gold did was it formed a bottom. When it formed the bottom, it was a TD9 count bottom. And that was at the 2016-30 level. And that was back in the early part of February. Then what happened, Basil, is we get a profile change in trend, where my cursor's at, this nice green bar that closes above the top of the profile. So that gave us a real signal. If you weren't familiar with what the bottom pattern was back here, the Rhodes Momentum Indicator signal, you certainly knew that gold had changed its trend. If you were short, you would say that's probably not the right position to be in, at least from a daily time frame. When price broke through that area, Basil, it went up and it formed this little TD9 count top. And that TD9 count top led to a sideways move. We never saw price close below the bottom of the profile, so it was just a top. And a top says to me that price should go down and explore support. Can it hold support? In this case here, gold never got down to that level. And that TD9 count top actually ended up failing, and it failed when price closed back above the top of that daily profile. About 5-6 days ago, we got a TD9 count top on the daily time frame, and that ended up being negated on Friday, as a matter of fact. But there was also another top, and that's the sell the D point pattern. That's a pattern that was taught to us by Larry Pesavento, who learned it from H.M. Gartley, and it's a great tool and a great pattern. So that pattern is still out there. But if gold were to close above 2384.50, that pattern gets negated. It says, all it would say, Basil, is I don't have a topping signal. We still might have price trading with inside its profile, 2,400 again at the top, 2318.70 at the bottom. And I'll have tomorrow, if people tune in to the Trader's Edge show at 11 o'clock, they'll know whether these profiles have taken hold or not. So it's all about emotion. It's about being able to identify tops and bottoms out there. Now, if we switch over and take a look at the daily NQ chart, The daily NQ chart, this is the first time that it's closing below the bottom of its profile, which is at 18,163. So what we know right now is we have a profile change in trend inside of the NQ. It also negated a TD9 count bottom, but here's an A to B equals CD pattern. So this says that price made the 1-to-1 level. That doesn't mean it's a buy. We wait for bullish reversal candles to confirm a bottom. If 17,861 doesn't hold, then we're going to be looking at 17,682 or thereabouts. So I see we're about to run out of time. Tune in tomorrow just to see where those gold and silver profiles are at.
Thank you so much, Steve. That's a great analysis, and we all appreciate it. And folks, Mastering Probability, check it out. Steve's terrific work. Thank you very much, Steve. Have a great rest of the day.
Take care, Basil. Thanks.
Thank you very much. So, folks, just as we're going to the break, the Dow is down 258, and we're looking at the S&P down 63. We'll be right back. Basil Chapman sitting in for Tom O'Brien.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Tigers, we have some exciting news. Live Trading Fridays are here. Join Larry Pesavento every second and fourth Friday of the month, 9 a.m. to noon Eastern Time, as he places short-term trades and gives insights into his strategies. That's right, that means the first Live Trading Fridays event starts this Friday, April 12th. Make sure to sign up so you don't miss the potential for huge gains. If you've attended Larry's stellar webinars before, you'll be familiar with the live trading portion. Live Trading Fridays will be strictly this portion. That's 3 hours of pure trading. All trade positions will be communicated clearly, and all questions will be answered in a timely fashion during these live events. When signing up, make sure to save $50 by using code LARRYLIVE at checkout. This code is valid only for this month, and the discount stays with you for as long as you're a subscriber to the service, so don't delay. Sign up, sit back, and follow Larry Pesavento as he places trades live. See you there, Tigers.
This portion of the Tom O'Brien Show is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi, folks. We're back. We're looking at the volatility index at 19.17, up $1.86. This is I've got to always write down what the issue is. This is the Iran-Israel and bonds. This is the last couple of days. Now, what we're looking at is that the 200-period moving average. Now, I have Chapman wave notation. It's not as important in the lettering. It's the only symbol that I follow that. I do the charting in terms of notations of A, B, C, D, E, F, G in the Chapman wave methodology, but it's not as important because it could fail anywhere. It's an emotional response. So in this case, it's a huge move up. We just on a very short-term basis, maybe an intraday basis, you can see you're getting very, very extended in the nervousness department. So, and it just happens to be a leg D. That's not as important. What is important, you see this Chapman wave inside track propellant zone that I've drawn in. It's been going on since late 2023, and we nicked it once, but we held above the trend line. This is a green line and a pink line. And look at how it became a very strong support level and a propellant for the price of the VIX as it came into that area. And look, the MACD was improving, stochastic was improving, 9-period moving average on Thursday. Yeah, Thursday crossed positive in the weekly chart. This is all the weekly chart. And look, long term, and look at the monthly chart, that horizontal line, that's just been a very good basing area for the VIX to go up. On a very short-term basis, we'll see what happens by the close today. But let me just go through some really key areas that I want you to touch. When you're looking at dollar HGX, when finally you can see that there's a picture in the Philadelphia Housing Index, which had a fantastic move. Remember, peak D is what we always look at in the Chapman wave methodology. That's where other things can happen. It doesn't have to fail there. That's where you can have an instant restart, all sorts of things. But that monthly chart is in leg D. It'll be a peak D if it cannot get above 742.53. That was the high on the 28th of March. So this is a negative, and it's taken out that left side low. This is a pattern that it looks like an arch formation or an inverted V. And you've got to be careful because when it takes out the left side low, if it doesn't quickly get above it, it means you can have a continuous move to the downside, especially when the 9-period moving average has gone negative. And the weekly, this is the daily chart. The MACD is already very negative with an expanding distance between the 9 and the 26-period moving averages. That's the aperture I'm looking at. And the on-balance volume, the relative strength right there is really weak. And the stochastic's down at 10%. Now, with that said, look at this. This is the world. This is the Vanguard. I spoke about this Thursday and Friday of this past week. I said, the Vanguard Total World Stock ETF, although the monthly chart is only in leg C, making a new high above the 109.30 November 2021 high, it went to 110.74. I cannot tell you how many charts we've looked at that have made these double tops after November, December 2021 high, going all the way down and sometimes cut in half and then coming back again to that exact level and starting to stall within pennies of the left side high. So this is the Vanguard Total World Return, peak E, sell signal upgrade to a sell mode today in the daily chart. Weekly, now this is why I'm worried. This is the weekly chart. When I got peak Bs and Cs, I said, the weekly chart still looks like they're going to go higher. At this particular point, I've got this really important Vanguard Total World Stock ETF pulling back sharply. You can see that we've got, let me go to this once again, just for the moment. I'm going to go to the futures just because that's very clear. The futures in the Dow made a peak D. D is where other things can happen. Yes, the monthly chart is only in C. That's still very positive. But it just says, and the 9-period moving, look how long it took. Look how long it took for the semiconductors to finally today. I don't see there's any chance of them turning up to green today. So I'm going to say there's of course, you should never say never, but with 20 minutes to go, I can't see that happening. Look how long it took from that high that was made in the semiconductors right there on the 7th of March at 234.91. It's taken until now, today, over a month, to get that 9-period moving average pink. And that just says to me, you've got to, and the questions came in, so what should we do? We've been raising cash for my subscribers to my opening call. It just looked to me that this is an appropriate time with that spiral to the upside. Now, let me just go, I had a question as well to Bitcoin. So Bitcoin is pulling back. Remember, I said the rectangle formation, the longer it stays in the rectangle formation, the greater the chances are that it's going to take out the left side low of importance, in this case, 61.79 in Bitcoin. This is the futures, the low of the 20th of March. If it closes, not just under it, but if it closes a couple of, in this case, under 60,000, and here we are, 60,590. It's still a long way to go. But if it does close, that's going to impact the monthly chart where you had a long-legged doji candle at a peak F. In the weekly chart, the 9 is way over the 14. I don't see this turning pink. That is a 9 under the 14, unless the Bitcoin starts to trade in the 54 to 53,000 area. Hasn't done that yet. So this is a work in progress. The MACD's turned down, but still positive. Stochastics now a little negative, under 80%. That's 78%. And the on-balance volume, which gave a top a week before the actual high of 75,185, that's to be noted. Now, here's the thing. Look at this beautiful cup formation. You remember I was talking about getting back to the previous highs? Well, the all-time high in Bitcoin back in November of 2021 of 74,560. Remember, this is a continuous contract, so those prices changed. With 74,560, we went to 75,185 in this beautiful cup formation. This is not exactly a plumb line where I can use the number of bars on the left to the number of bars on the right, but certainly the price made its parallel high. Look at this, right there. And it went a little bit above it. So that just says the monthly chart, and I remember this morning when I did my show, and tomorrow I'll do a lot more in showing some of these charts with more Chapman wave notations and what we're looking at and the reasons for them. But in the meantime, this Bitcoin GBTC is the Bitcoin trust. This is the investment trust. Broke to a new, substantially above the 58.22 all-time high that it made back in 2021. It went all the way to 65.61, 58.22. So this is quite a bit of a just as leg C. And that says Bitcoin should make new all-time highs in 2024. Just right now, got to be a bit careful. I'll be back. Basil Chapman, sitting for Tom O'Brien. The Dow's down to
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors. For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
TFNN has launched The Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Tom O'Brien.
Hi, folks. So I thought what I'd do here is, first of all, I just wanted to mention I have a plethora of techniques that I've developed over the decades. One of them is my Chapman wave trend gauge. All I do is I use Richard Arm's index that he's done. And I have two numbers, one on the upside, one on the downside. If it goes below that, it means the very next session, no matter how high the Dow futures are, it's going to be, it'll go negative intraday. And on the upside, I've changed this. That's the reason why these are the only two numbers that I never mention, because everything else I talk about publicly, but this I don't, because I've always had a feeling that the numbers are going to change, and I don't want to lock into that kind of number. But on the upside, if it goes over a certain number, it means I used to say within 2 days the S&P futures should give a strong rally, which will help the market. That's all it does. It doesn't say it's a great, fantastic. It just says that's what should happen. And it had that on Friday, very high reading. Today, the reading, look at this. And this is something you always have to take note of, because it's the interpretation. Remember, all of these things are subject to interpretation. They could be objective or subjective. Look at this. The trend today had a high of, if I can get it, if I can read it, high of 98 and a low of 63. Under these conditions, it should be up. It was at 2.33 on Friday, which is the reason why I said there should be some kind of a bounce before maybe going negative today, which is exactly what happened. And for tomorrow, I have no reading. It's an almost independent thing. But I am getting a reading in the sense that you see this chart right here. This is the chart I show my subscribers every day. Let me just grab this. I'll show you it right here. For my target, for my Traders Corner, I have a list over here. You'll see it. This is my Traders Corner with all our positions and analysis of everything that's going on, what we're doing, raising stop, lowering the stop, whatever it is. And this here is the, this is what I write. And I give exactly what I'm looking for. And for instance, here I said if plus 80s or more into the 132.30 Eastern time frame, that will be a positive. The positive close is likely. The implication being a minus 30s or more that holds into mid-session stalls any bounce potential. That's what I do every single day for subscribers. But what I wanted to show is this little picture right here with these three charts. That's this one right here. It's active as you're looking at it. Shows you that this is called the Chapman wave. These are automated support and resistance lines. The 37,650 is the next support line. It broke that one over, stalled for a few days and then broke it. This is the last one, and then there's nothing for a while. And look at all the ones at 37,648 in a 120-minute chart, 37,486. That's much lower down. So there you can see we're starting for the first time to get support levels, and that says now we could have a little bit of a bounce. Not now, I don't mean right this very minute. I mean coming into Tuesday, maybe Wednesday, but the way that this has worked, I cannot ignore it. To me, I call it the indicator of last resort. I've used it for years and years, used it in trading the E-minis. This, to me, waiting and waiting for the semiconductors to give the signal. Is NVIDIA giving the signal here? Let's have a look. Did I do something wrong? NVIDIA. Yes, it is. Pink. That's not a good sign. Now, let's look at AVGO, which is holding really well. That's Broadcom. Nope, nothing to see there. Not yet. So you can see it's a work in progress. And that's what I'm saying. As I said to subscribers, we're raising cash. We've got our short position. We are short the Dow. We're looking at other places that we haven't ever shorted before. I'm considering, and one of the reasons is when you get the TLT, that's the iShares. Look at the inverse, the TBT, which recycled to the upside is now in a leg E. And that just says, wow, leg E, right here. Let me just put that in. This is where you've got to be a little careful because that's where you can get your turnarounds. But look, the 9 is strongly over the 14. The MACD, the moving average convergence, divergence, is looking good. The relative strength is okay. It's good, actually. It's more than okay. The stochastic at 89%. When you get the stochastic flat or rising, that is a very bullish sign. So this is still rising, and the on-balance volume is just becoming a little bit overbought. And it's only a leg C in the weekly chart. This is the TBT, which is the inversion. This is the direction of the yields for now. But if you look at the monthly chart, it has a lot of way to go to get to the all-time high. I don't think that's the case. I think this is a very important moment where the general market needed a breather. It needed any excuse. It certainly got a couple of excuses, right? But at the same time, those monthly charts are really important. So the monthly chart for the TBT is still rising with the 9-period moving action, 9-period moving action well over the 14. The MACD is kind of okay. It's not great. The stochastic's very weak. So I'm watching this closely because what we would need to see, as far as I'm concerned, looking at this market, let me just go through this. So I have these 5 little icons. I call them Bondy for bonds, Crudy for crude oil, Dolly for the dollar, Goldie for gold, and VIXY for the volatility index. Well, we've got bonds breaking down, crude oil holding well, not breaking out to the upside yet, but it's still holding pretty well in the 87 area, 85 to 87 area. If it starts to get to 88, that's another thing altogether. That'll be very negative for the general market. But so far, we're used to this kind of oil situation. And look at the gold. Gold has been breaking out beautifully since February. This is a fantastic move. If you look at the GDX, finally, the GDX, whoops, there it is. The GDX, the miners did participate, but look at this resistance in the monthly chart. When this GDX finally starts to trade, I don't mean break out, but I mean trade in the 37.50 area. It's at 33.48 right now, down 27 cents. I think you're going to be looking at something very different. So those are the levels that we are looking at. Here's another thing that makes me concerned. IYT, I was talking about those double and triple tops. Look at this. IYT, the Transports, Dow Transports, back in 2021. When was it? It was like May or June. Yeah, May or June. May of 2021, it goes to 70.60. Plummets down to the 49 area, and then where does and not only that, it made 3 tops, didn't break out, just 3 tests, broke down, and then just the other day it broke to the upside and it went above that 70 level and it went to 71.16, makes a V-shaped formation, fails to take it out, fails at 71.11. That's the V-shaped pattern where the technicals were all weak on the right side. Now it's down at 66.95. Still not a big deal. But this is what I wanted to mention. In the Chapman methodology you saw that in the Dow. I don't know if any of you noticed you're not Chapman waivers. I have a lot of those people out there. Look at that peak C1, C2. That means that it just missed making the D, but all the technicals suggested that it could have done it. The price just didn't get there. I use that as a peak D and a potential signal. Well, look at this. IYT. I like it. This is not necessarily, I'm not using it as Dow Dow Transport's confirmation of the Dow. I'm saying, look, you went to that top and you failed at that peak C1, C2 in the weekly chart. Yes, yet another weekly chart that says, just be a little careful here. It's not a problem to raise some cash. You don't get to panic or anything like that, but just raise a little bit of cash. That's what I'm saying. I'll be right back. The Dow is up, now down 214. Not too bad. S&P's down 56. Basil Chapman for Tom O'Brien.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter. A must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the newsletters tab on the front page of TFNN.com. TFNN. Educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi folks, Basil Chapman for Tom O'Brien, and just as we're looking at this the final couple of minutes, let me show you this Chapman automated support and resistance levels. Look at the Dow, 37,657 right here. We've got daily and the 120-minute, a whole cluster of them right there. So we're getting close. And I think this is a work in progress. I don't think this is just like the huge sell-off going down 20%. I think, to me, 4 to 8% is really the start of something. And then I have to look at the weekly charts, just step by step. Look at the S&P, SPX.X. There we go. S&P just went under a double support level of 5072 and 5069. Trading at 50, if I can read it from here, 065. Nothing in the weekly, but look at the 120-minute chart, a bunch of support levels, Q. So either we just plunge through it overnight into the tomorrow morning, or this is a start of some kind of a bounce, and then we make lower lows and lower highs. The QQQ is nothing in the day until we get to 428. Oh, we're really close. We're at 431, and then 430.07 in the 120-minute chart. IWM has 194.82. We've already been there today. And in the 120-minute chart, key support levels, gold, let's see what's happening in gold. Gold has a resistance at 24.13 at this particular point, and 24.04, we're above that. No, we're just under it in the 120-minute chart. So these are all things to say. Oh, let's see the volatility index. The VIX index right now has 19.06 resistance. We've gone high. We've gone to 1946. We're at 1906 right now, and 20.64 on the 120-minute chart. So be careful out there. Be careful out there. And what I am saying is that it's a work in progress, and that's the reason why we're looking at those 120-minute charts. You can see even here, Amazon is down sharply, down $2 at 183. 187, 189 was the all-time high. 188.65 was the all-time high in July of 2021. It went down to 81. It came over 100 points back in late C. So the monthly charts are looking good. Weekly charts are saying, oh, just be a little careful. And if you look at Amazon right now, this looks like nothing. It looks like an eye blink, right? So it depends where you are. Check out my opening call daily newsletter. And Basil Chapman sitting for Tom O'Brien. Tom will be back tomorrow, and thank you for being here.